Rise and shine, my crypto crusaders, digital treasure hunters, and everyone who still thinks Dogecoin is a retirement plan. Welcome back to another episode of the Blockchain Report, the only show that slices through the noise, sidesteps the scams, and delivers pure, unfiltered chaos and mayhem straight to your screen. I'm Hank Hudson, your guide through the unpredictable world of Bitcoin, AI, and Web3, where wealth is created at lightning speed only to evaporate before your morning coffee gets cold. We appreciate your patience this morning. We got a lot of computers going on in that other room, and as Donald Trump says when he enters a Tesla, it's a little confusing. We're coming to you live from our tech fortress here in San Francisco, California. But before we crack open today's insanity, I want you to do me a quick solid. Hit that like, follow, and subscribe button for Roxham TV and Hank at Roxham TV. And in return, I'll load you up with just enough blockchain knowledge to sound like a pro, or, at the very least, avoid total humiliation the next time you try to flex on crypto Twitter. Because remember, receipts on the blockchain are for everyone to see, and they last forever. The markets are moving, speculation is at an all-time high, and somewhere, right now, someone is talking about making a ridiculous amount of money selling a pixelated cucumber. We've got a great show to you today with top stories including Fintech companies becoming banks under the new Trump administration. We have the SEC may scrap Biden-era crypto proposals, and why Kevin O'Leary says the Wild West of crypto days are over. That and much more, but first, this morning's Market Rundown. Market Rundown, it's time for Market Rundown, and we don't have a song for it yet, so I'm gonna sing one for you. All right, we're going to camera 3. Brad, you're really killing me today. We're starting on camera 3, and here we are. All right, let's see what things are moving and shaking in the markets this morning. It's not looking good, gang. I'm not going to lie to you. Bitcoin is down almost 3% this morning. Ethereum is down 2%. XRP is down 4%. Cardano's down nearly 4%, and Dogecoin is down almost 5%. We are seeing some broader sell-offs this morning as people are eagerly awaiting the news about potential rate cuts from Jerome Powell upcoming this week, but it's not looking good. I don't think anyone's expecting any, at least in the near term, so the market is certainly reflecting that. And the stock market is not doing a whole lot better. We have the Dow Jones down 0.73%, the NASDAQ Composite down almost 2 percentage points, the S&P down a little over a point. MicroStrategy, it goes where Bitcoin goes, is down almost 2.5 percentage points today. Tesla taking another beating, almost down 4 percentage points. Elon, get back to work. And Nvidia is also down almost 2.5 percentage points. Not looking good to start the day, gang. But the good news is today has only just begun. We'll be right back.
Security matters. Xapo Bank. The only way to bank your Bitcoin. Apply now at xapobank.com.
All right, gang, welcome back to this morning's Bull Run, where we cut through the crypto chaos so you can do other things with your life. Our first story today, Fintech is officially back in the banking game. SmartBiz just became the first financial technology firm to win approval as a bank under Trump's second term, proving that, yes, regulators do occasionally let fintechs have nice things. Now, for the last few years, getting a fintech bank charter has been about as easy as getting a refund from an NFT project. Impossible! But the Trump administration seems to be cracking open the vault, and SmartBiz is the first to sneak on through. So, how did they exactly pull this off? Well, SmartBiz bought Centrust Bank in Illinois. That's my state. It's where I'm from. A strategy known in the financial circles as we're not waiting years for a new charter. Let's just buy an old one. Now, with approval from the Office of the Comptroller of the Currency and the Federal Reserve Bank of Chicago, SmartBiz can now call itself a bank without getting laughed out of the room entirely. Their CEO, Evan Singer, says the goal is to actually help small businesses, which, if true, means they've already outperformed most traditional banks. Now, SmartBiz specializes in small business lending, a market that boomed during the pandemic when banks were busy turning down loan applications from actual businesses and handing out PPP loans to fake ones. Now, with a banking license, they get access to FDIC-insured deposits, better funding, and the privilege of pretending they care about financial regulations. What's next, you ask? Well, other fintechs are watching closely. Big banks might start sweating. Silicon Valley VCs are already updating their pitch decks to include the word bank at least 14 times. Now, Claros Group partner Michelle Alt, she put it best, saying regulators have lowered the gate over the moat, which is the fanciest way possible of saying, congratulations, fintechs, you're allowed to play banker again. And questions for our guest that will be coming up to you, our friend of the program, we have Anton from Xapo Bank. Anton, how are you this morning? Thanks for dealing with the whole internet problems with us. We love having you on the show, and we appreciate having you here. How are you?
Hello, Hank. I'm very excited to be back. Very excited.
Almost as excited as I am. I don't know if you can see under the desk. My feet are just kicking like a duck underwater. So, Anton, we got a lot to talk about. SmartBiz just pulled off the impossible, and they became a real-life bank. Does this mean fintechs are finally allowed at the grown-up table, or is this just a one-off and the rest of the industry is still stuck outside like a crypto bro at a country club?
Yeah, well, Hank, I can talk from experience. Xapo actually was the first regulated bank in the world to have full banking license together with a VASP license, which essentially allowed us to have a Bitcoin account as part of the bank account. So what we are seeing, there is a very, very strong demand from people to bank with their Bitcoin. And it's not a surprise that more financial institutions are entering the race. They're trying to have a bank license and try to leverage the regulations that are actually becoming very favorable for the entire crypto industry. And what also it's important here to highlight, basically everything is related to the Bitcoin adoption. We are super happy that more banks are trying to enter and compete with us. That's great because it's helping the entire Bitcoin ecosystem. It's helping the Bitcoin adoption, and we are ready to see what they can offer. This is just a win for everyone having Bitcoin right now.
Yeah, it seems like this is just another phase in the maturation of the Bitcoin process. As we've seen over years, as Bitcoin is becoming wildly more accepted by both banks and institutions moving forward, which is good for all of us in this industry, so I certainly understand why you guys are excited about it. Now, SmartBiz kind of took the classic approach, which is why apply when you can just buy, by snapping up an existing bank. Now, are we about to see Silicon Valley VCs buying up failing community banks just so they can slap a fintech bank sticker on them and start issuing loans through an app?
I think we are going to see a mixture between fintechs applying for a bank charter, which essentially it's a bank license allowing you to offer banking services, and then some of them which do not want to wait a few years, they would try to acquire. Like acquiring a bank, it's much more expensive, and there are a lot of regulatory repercussions. So it's going to be a mixture. What actually I prepared for this question, I checked that from 2010 to 2023, an average of only 5 bank new charters were issued every year in the United States, which means essentially only 5 banks every year were established. What we see and what we expect to happen is that unless more like institutions try to get bank charters, basically 5 per year is not going to be enough. And then the only way is going to buy, like the only option for you is going to be to go and buy an existing bank, but this is much more complicated. Again, it's good that the US regulations and the new Bitcoin Pro administration in White House, it's going to deregulate the entire industry, the entire banking industry. That's a very clear trend, and that is going to be pro-growth, pro-innovation, and super beneficial for Bitcoin. So I think the next few years are going to be super exciting for the banking industry.
That's great info. You really did come with your homework prepared today. We appreciate that. That's some good stuff, Anton. And with regulators lowering the gate over the moat, as it was put in the story today, should traditional banks be worried that fintechs are going to start eating their lunch for them?
Traditional banks, yes. So what's happening, and like crypto is just one of the industries. I can make a parallel with the automotive industry. Like nobody was paying enough attention on the electric vehicles before Tesla. Tesla appeared, and now everyone is trying to build electrical vehicle, like every major automotive brand. This is going to happen with banks and Bitcoin. And right now you have Xapo. Again, I don't want to promote our bank, but you have a fully regulated bank offering Bitcoin services. And since today, actually, we also offer Bitcoin lending. Essentially, you can borrow up to $1 million against your Bitcoin. So why to sell your Bitcoin and get USD for buy a house, buy a property, buy a car? You don't have to anymore. You can simply borrow against your Bitcoin. And because Bitcoin has amazing track record of approximately 60% appreciation per year for the past 13 years, I think this is going to be a huge challenge for other banks. They're going to see what we are doing, and they will enter this race very aggressively in the next few years. Partially because of the competition, but also because the White House and the crypto policies are going to allow them. Because in the past, even if they wanted, it was super hard game. We struggled a lot to build the solution we are offering right now internationally, and I'm very happy that we are actually pioneering and paving the way for other banks. But as I mentioned earlier, it's a win for literally for everyone having a Bitcoin, because in general the banks are operating under the trust narrative. People are trusting banks with their USD savings, or you're trusting the payment providers like Visa and Mastercard to pay with your card. And for the Bitcoin adoption, you need to trust a venue, to have a trusted venue where you can deposit your Bitcoin and do something like borrowing against your Bitcoin, paying with your Bitcoin. That's actually why Xapo was the first bank to enable Lightning Network, because we really wanted to support the Bitcoin adoption. And what currently you have, except Xapo, is just having an exchange, which historically can be risky to store your Bitcoin, or store your Bitcoin in a cold wallet. But if you move your Bitcoin to a cold wallet, you cannot use it. You cannot transact. You cannot borrow. You cannot do literally like anything, which is stopping the Bitcoin adoption. And our entire vision and what we embraced a few years ago when Xapo was created was to really help the Bitcoin to succeed and increase the adoption to become a mainstream. And now with other banks entering the race, this will just increase the trust in the entire system.
Yeah, no, and I'm glad you brought that up, because it seems like while some companies are buying their way into the banking system, you guys at Xapo are just kind of flipping the script by letting people borrow against their Bitcoin. For those of you in the cheap seats that didn't hear, that's a big deal, because I don't want to sell my Bitcoin. Nobody wants to sell their sweet Bitcoin. So, Anton, could you go into a little more detail for all of our viewers at home at how this process works? Because I know I'm not the only one that's got to be interested in, lending out my Bitcoin so I don't have to sell it. Could you tell us a little bit more info on how you guys do that at Xapo?
I would love to share. Before that, a huge disclaimer: Xapo is never lending your Bitcoin. We never did, and we are never going to lend your Bitcoin outside of Xapo. So what's happening? You can borrow against your Bitcoin. The Bitcoin LTV is 80%, which means you can borrow up to 80% of the current value of your Bitcoin. And then the collateral is going to be securely stored in our vault. Everyone is aware about our Swiss bunker. The funds are staying there. We are not reusing them, which means we are not going to borrow them to other third parties or invest them or sell them. No, the collateral, which essentially is your Bitcoin, it's securely stored. And then you receive USD without the need to sell your Bitcoin with 80% LTV, which is quite good. The interest rate is super low. Everyone can check our website and estimate, have some calculations, try to estimate the value. And this product actually is built for long Bitcoin holders. We have some members in Xapo holding their Bitcoins with us since 2013. Those people are here for the long run. They don't want to sell their Bitcoins, never. They survive different Bitcoin crashes, different Bitcoin events, and those people really wanted to be able to borrow against their Bitcoin, because at the end, we are talking about banks entering the race, the Bitcoin adoption, but you still need to use USD or any fiat currency to buy a house, to buy a car, or simply to go somewhere on a holiday. And nobody really wants to sell their Bitcoin, because the Bitcoin is supposed to go to the moon in long term. And that's why we built this product. Actually, it's based on our members' demand, and we're the first financial institution to build it. And also, we should distinguish Xapo from historical fintechs trying to offer something like this. Everyone is aware of what happened in 2022, and that's why I started with the disclaimer that we are never doing anything. We are not reusing your Bitcoin. It's just staying in our vault, which is very different from what happened in 2022 with other fintechs. And again, we talked about trust, and Xapo is a fully regulated financial institution. So that's a new game that we are now establishing. You can borrow from a regulated bank.
Yeah, I really appreciate you making that clarification. I'm only on coffee number 4 this morning. It usually takes 5 or 6 till the brain is quite working properly. And unlike some of the high-risk lending platforms that went up in flames in the past, Xapo is offering way more conservative loan-to-value ratios. So how do you convince people that this isn't just another hold my beer moment in crypto lending, but it's actually something new and different and better?
We rely on our history. That was established 2013. We had 12 years of offering Bitcoin services. And if you to do something with your Bitcoin and you don't want to sell your Bitcoin, currently there is no other option on the market to borrow against your Bitcoin. And the best way is to go to the bank and borrow some money. But if you go to a traditional bank and say, I have some Bitcoin, I want to borrow money, they're going to say no. If you go to a bank and say, I have some stocks, I have some equity, or I have a salary, they will say, okay, yeah, you can do it. But with Bitcoin, it's still not that recognized as a financial collateral asset. And that's basically what we are offering right now, and what is very, very, very unique. It's related with the trust, and it's related with the way how Xapo is structured and how it has been structured since 2023.
Very cool. Now, let's say, just as a theoretical, someone that's definitely not me wants to take out $1 million loan against their BTC, and then Bitcoin moons 3x overnight. Is that person, who's definitely not me, going to be sitting there regretting that decision? Or does Xapo have a way to let them adjust their own loan without feeling like they just got rugged by their own collateral?
Your Bitcoin is your own, like you're owning this collateral. If the price go up, basically you're generating more and more profit. So actually this is the positive scenario. If the value of your Bitcoin today is 100,000 and then tomorrow is 300,000, when you close your Bitcoin loan, at the end, the amount of Bitcoin that you're owning is just going to cost you more. We don't have any penalty fees for early Bitcoin loan closure. You can borrow today and decide that tomorrow you don't need the money. You just complete the loan without any additional fees, without paying the interest rate of the remaining period. So actually, I believe it's very, very, very fair and transparent. If the price of your collateral goes down, you can always increase the amount of your Bitcoin collateral. Currently, with the current amount of Bitcoin, actually the Bitcoin price needs to go below 20,000 before you really have to get worried and adjust your collateral. So it's it's a good way.
Well, Anton, you've convinced me. Actually, let me ask you, do you have a pen and paper handy? Because I just want to give you my seed phrase really quick so you guys can take my Bitcoin, because I think I've got a loan to take out. Just kidding, mostly. Anton, stick with us. We got one more story I'm going to bring you back for in just a second, all right? So, gang, Kevin O'Leary has spoken, and crypto's lawless, wild, wild west days are over. And his reasoning, well, all the crypto cowboys are in jail or out of business. And honestly, he's kind of not wrong. I mean, just take a look at crypto's most infamous outlaws. Sam Bankman-Fried was sentenced to 25 years for wire fraud, money laundering, and conspiracy. Binance's Changpeng Zhao pleaded guilty to money laundering violations and is serving time. And Justin Sun is still ducking subpoenas and negotiating with the SEC over fraud allegations. Now, according to O'Leary, the days of unregulated crypto anarchy are gone, and the industry is finally maturing under Trump's second term. And in his view, crypto is on track to become a fully integrated part of the U.S. financial system. He claims that Trump's regulatory stance will finally provide the framework needed to legitimize crypto in the eyes of banks, businesses, and institutional investors. Which is an interesting take, considering Trump himself once called Bitcoin fake money. But back in 2019, Trump dismissed crypto entirely, in fact, saying it was based on thin air and would never compete with the US dollar. But fast forward to 2025, and now Trump is accepting crypto donations, pushing for a strategic Bitcoin reserve, and even headlining Bitcoin conferences like the one in Vegas on May 27th to May 29th. Use the Roxham discount code for 10% off. Funny how money changes things, right? But yeah, don't forget to do that. Now, O'Leary once mocked Bitcoin, is also on board, claiming that 20% of his portfolio is now in crypto and blockchain assets. So, if nothing else, this should serve as a reminder that in the world of crypto, the biggest bulls are often just bears waiting for the right price. So we're going to welcome Anton back here. So Anton, Kevin O'Leary of Shark Tank fame says that all crypto cowboys are either in jail or out of business. But let's be honest, does crypto really ever stop being the Wild West? Or are we just between crime waves waiting for the next sheriff to get distracted before a new batch of scammers rolls on into town? What do you think?
With the new, what we discussed earlier, with the new crypto regulations that are being established, it's going to be harder and harder for the cowboys to keep riding. But what I think, because Xapo is here since 2013, we saw pretty much every cowboy or every a scammer trying to steal bitcoins and other cryptocurrencies. I think this was kind of needed, part of the Bitcoin history. Because what happened a few years ago, if you have told me that we are going to have a US president that is signing executive order for strategic Bitcoin reserve, I would have laugh. This was not even thinkable, and maybe it was not even thinkable 1 year ago, 12 months ago. So the entire Bitcoin ecosystem evolved very rapidly in the past few years. So this was just needed part of it, just to show that Bitcoin is going to change the way we are banking and how we are transacting. So I have mixed feelings, not negative or positive. I think it was just a needed part of the Bitcoin just to become the mainstream way of banking.
Yeah, it seems like the part of the natural evolution of Bitcoin as we've seen it maturing as an asset class over the years. And with Donald Trump now fully embracing Bitcoin, pushing for a strategic Bitcoin reserve, and even headlining crypto conferences, is this a sign that crypto has finally gone corporate? Or is this just politicians doing what they do best, hating something until they realize that they can make money off of it?
I wish I believe it's not the second one. It's the first one, which means the industry adoption is growing. TS are a very, very good sign and proof that there is demand for Bitcoin. So if it was from Trump's side, if it was just for making some money, he would not hire and appoint some Bitcoin or crypto experienced leaders in some very key positions in different departments. The way that Trump and the entire administration is hiring, for example, David Sachs, that's a very strong proof that they're really looking for the long term, and they believe this will help United States to change the way they are managing the financials internally. And usually, what we saw in the past, the United States usually is leading, and then the other countries are following. So I won't be surprised to see more countries trying to mirror what's happening now in the United States, especially with the executive order for the strategic reserve. I know some Bitcoin maxis are not super excited, but again, the long-term consequences of this decision are extremely bullish for Bitcoin. So to answer your question in one word, it's just the Trump believes in crypto.
Yeah, absolutely. And I think the Bitcoin maxis that aren't excited right now, it's just because they were expecting a little bit more than what we saw. They were expecting the United States to go full-blown degen and say, hey, we're buying all the Bitcoin we possibly can. And I think there will come a time in the not distant future where that does become a thing. I mean, Cynthia Lummis, senator, is already proposing that we buy, I think, 200,000 Bitcoin a year over the next 5 years for every single year. So it's coming. It's just not as soon as some people were hoping. And let's say, for instance, that the cowboy era maybe isn't quite over yet in crypto. I mean, crypto is still a little volatile, and regulations are still shifting underneath our feet a little bit. And bad actors are always finding new ways to cause chaos. If we're still in the Wild West, how does Xapo Bank help customers keep their Bitcoin safe from modern-day outlaws of the crypto world?
Right. So on Xapo Bank, I will highlight just the three main points. The first one, it's related with the single point of failure narrative. There are some Bitcoin maxis that are very believing in themselves, saying that I'm going to hold my private keys and nothing is going to happen with me. I'm not going to get hit by a bus and die tomorrow. So I'm not going to forget my private key, which what we are seeing from the data actually is not true. Much more Bitcoins have been lost from people damaging their private key in some way or another, rather than hacks on exchanges. The second narrative which we're trying to explain to people, it's about the UTXO management. People are really underestimating how complicated it could be to manage your UTXO with your when you're storing your Bitcoin in a cold storage. So Xapo on this site is completely taking care of the UTXO management. So as a Xapo member, you just don't care. You have one less thing to care about. And then the third part is doing something with your Bitcoin. If you keep it in a cold storage, you cannot pay with it. You cannot use Lightning, for example. You cannot easily convert your Bitcoin to USD. And also you cannot borrow against your Bitcoin. So it's essentially like you have a Bitcoin which is locked, and if something goes wrong with you, it's going to be completely lost. And if you use your cold storage to rebalance, then you have an issue with your UTXO. So it's about just optimizing the way how you are storing Bitcoin. And then if you go to the market, you will see that exchanges are risky. They're not ideal. Cold storage, everything we discussed so far, it's not optimal. And then you don't have a lot of other options. Like if you're an institution, you can go with some ETFs, but then you always have to trust your partner that they're going to properly associate the ETF that you're owning to you. And then you have Xapo Bank, which is essentially solving the three issues we just discussed. We are still unmatched at the moment. Our value proposition is still very unique.
I mean, Anton, as always, I got to thank you for your time. And I got to thank all you guys at Xapo for keeping my sweet, sweet baby Bitcoin nice and safe. I don't know what I would do without you guys. So if our viewers at home are looking to keep their Bitcoin nice and safe in a truly digital Fort Knox, go check out Xapo. They're the guys that'll do it for you. Anton, always a pleasure having you on the show. And we're excited to have you back very, very soon, my friend. Thanks again for your time today.
Thank you, Hank. It was a pleasure.
Always is. Good seeing you, buddy. All right, well, the SEC's ever-spinning policy roulette wheel continues. And this time, it looks like the Biden-era crypto custody proposal is back on the chopping block. Acting SEC Chair Mark Uyeda said on Monday that the commission is considering revising, delaying, or completely scrapping a rule that would have required investment advisors who hold custody of cryptocurrencies and other assets to meet stricter security standards. And why, you ask? Well, because people complained. That's right. Wall Street saw a rule designed to protect investors from fraud and mismanagement and decided that, actually, they'd rather not. Uyeda didn't specify which parts of the rule might be softened, but considering how hard former SEC Chair Gary Gensler pushed for stricter crypto custody requirements, this is a major reversal in regulatory policy. Now, for context, Gensler's original argument for this rule was that it would ensure investment advisors couldn't use, lose, or abuse their clients' crypto assets. That's got a nice ring to it, I'll admit it. Now, which, if history is any indicator, is a very valid concern. After all, we've had the FTX collapse, losing billions in customer funds like it was loose change under the couch. We had Celsius imploding under its own weight while acting like a giant Ponzi scheme, and Do Kwon's Terra Luna disaster, which wiped out over $60 billion overnight. But apparently, the public comment period was flooded with criticism, with many arguing that the rule's broad scope made compliance nearly impossible for firms working with digital assets. So now, instead of moving forward with those safeguards, the SEC is pumping the brakes. But that's not the only regulatory retreat happening. Ueda also suggested the SEC might delay or revise another rule that requires mutual funds and ETFs to report their portfolio holdings monthly instead of quarterly. Now, this rule was introduced just last August under Gensler's leadership as part of an effort to increase transparency in financial markets. The reasoning was pretty simple. More frequent reporting means investors get more information faster. But now, Ueda says some public commenters have raised concerns that frequent reporting, combined with advances in artificial intelligence, might actually create new risks, which is a fascinating argument. Because apparently the concern is that AI-powered trading algorithms could use the increased transparency to front-run markets more effectively, potentially exacerbating volatility rather than stabilizing it. Or in other words, the rule might actually give hedge funds and high-frequency traders an even bigger advantage over retail investors. So now the SEC is reevaluating whether more disclosure is actually a good kind of disclosure. And speaking of changes at the SEC, let's talk about the new boss, shall we? Former SEC Commissioner Paul Atkins, a Trump appointee and longtime advocate for reducing financial regulations, has been nominated as the new SEC chair. But don't get too excited or worried just yet. His Senate confirmation hearings haven't even been scheduled, which means, for now, the SEC is stuck in limbo with Ueda making policy decisions while everyone waits to see what kind of stance Atkins will take when he officially steps in. And crypto isn't exactly America's favorite government expense just yet. According to a new data for a progress poll, only 10% of U.S. voters think the federal government should increase spending on cryptocurrency and blockchain development. That's right. Just 1 in 10 people believes the government should put more money into crypto. Meanwhile, the majority of Americans are far more interested in putting those dollars elsewhere. In fact, 65% want more funding for Social Security. Kind of boring, but okay. 64% want more for Medicare. Not bad. And transportation and infrastructure, education, and other government programs all ranked much higher than crypto. Hard to argue with those. And in the least surprising statistic of the year, precisely 0% of people are out here demanding federal subsidies for meme coins. Thank God. So if you were hoping for a congressional Dogecoin Relief Act, you might be waiting a while. Now, while the polls suggest that Americans aren't big on government-backed crypto spending, the White House is telling a different tale. In a recent fact sheet, the Trump administration clarified that the U.S. Bitcoin Strategic Reserve isn't actually using taxpayer money at all. Instead, it's being entirely funded by Bitcoin seized from criminal and civil asset forfeitures. That means no tax dollars are being spent on this initiative, just Bitcoin that the government already confiscated from criminals. So, in a bizarre twist of fate, the U.S. government is now a massive Bitcoin whale. We always knew Uncle Sam loved printing money, but now he's stacking sats too, baby. Now at this rate, don't be surprised if we see the Federal Reserve adding HODL to its official monetary policy sometime very soon. We'll be back with more Bull Run right after this.
Security matters. Xapo Bank. The only way to bank your Bitcoin. Apply now at xapobank.com.
Welcome back to the bull run. XRP holders everywhere, this story's for you. Because it's your favorite time of the cycle again. Wildly optimistic price predictions with absolutely no supporting evidence. Let's get into it. Because right now, XRP is bouncing between 230 and 247, which is still down like almost 2% from last month. Not exactly the stuff of legends, gang. But don't tell that to the XRP captain, a crypto analyst on Twitter/X, because I'm going to have to do this forever, who confidently declared that XRP is heading toward $100. And before you ask, no, he didn't provide a timeline or a reason or literally anything resembling logic. He just said that $100 is the target, and he just left it at that. Meanwhile, another crypto analyst, Eggrag Crypto, is setting expectations slightly lower, calling for double digits first before XRP eventually skyrockets to triple digits. His big piece of technical analysis, a just do it chart. Yeah, apparently Nike slogans now count as financial models. But wait, there's more. Another analyst, Dark Defender, threw out an even wilder claim, saying XRP could hit $333 if it replicates its 2017 bull run. A price like that would give XRP a market cap of $1.6 trillion, and for reference, that's roughly the GDP of South Korea. So just keep that in mind. Skeptics actually pointed this out, but Dark Defender dismissed them, saying that market caps were just an illusion, Michael, which is also a great way to describe most XRP price predictions. So, take it for what you will. And Trump's latest business venture is here, and surprise, it involves crypto. His World Liberty Financial Project just wrapped up its second token sale, pulling in another $250 million. That brings the grand total to $550 million worth of coins sold. And here's the best part, 75% of net revenue goes straight into the Trump family's pocketbooks. Gotta appreciate the honesty though, I guess. Now, most crypto projects try to hide where the money is going, but not this one. Meanwhile, Tron founder Justin Sun, who's still tangled up in SEC fraud charges, upped his stake in World Liberty Financial to $75 million. Because nothing screams good investment like a Trump-backed crypto project with a literal wanted man as a major investor. Now, while we're talking about Trump and Bitcoin, did you know that the 2025 Bitcoin conference is happening in Vegas, May 27th to 29th at the Venetian? The Don is even rumored to be making an appearance, and even if not, I'll be there, which is like a pretty crummy consolation prize, honestly, but hey, it's something. So totally random bringing that up. Also, the promo code ROXM gets you 10%. It should be in the description below. Gets you 10% off admission. So be sure to click on that and the banner ad or below and let that 10% save you a couple bucks and let it ride on black, baby. But yeah, enough of that. Back to the actual news. Next up, we have, turns out being a terrible trader is now a high-level money laundering tactic? Oh, do tell. North Korea's Lazarus Group has figured out how to disguise stolen crypto by intentionally making awful trades. And somehow, it's working. Now, how it works, let's get into the bad trader laundering playbook. This is how it goes. They swap huge amounts of stablecoins at absolutely terrible rates. An example of this might be $90,000 in USDC traded for just $2,300 of USDT. Now, on paper, this looks like an absolutely catastrophic loss, probably something I would actually do, but their own bots are on the other sides of these trades. And the money is now clean, disguised as arbitrage profits. It's basically like laundering by playing dumb. Now, why in the world does this work so well? Well, crypto exchanges see tons of bad trades every single day. Newbies lose money every single day, and people fat finger transactions every day. Now, traders miscalculate arbitrage plays all the time, and by mimicking real mistakes, Lazarus makes their laundering look like just another dumb trade. And the process isn't just a random loss, it's part of a system. So stolen funds are moved through multiple wallets, deposited into DeFi lending protocols like Aave, added to liquidity pools on Uniswap, used for intentionally terrible trades. and then they're scooped up by their own trading bots. And once it lands in their final wallet, the funds are clean and ready to cash out and spend on, whatever dumb haircut Kim Jong-un has this time. Now, what's the bigger picture? You guys like that one? I got laughs in the back. We should keep a point total. If I can get laughs in the back, that's like my ultimate badge of honor here. So again, what's the bigger picture here, gang? Crypto exchanges like Binance and Coinbase are in a constant game of whack-a-mole with criminals like Lazarus. And now that this trick works, other bad actors will most definitely copy it. So next time you see someone make a horrific trade, I want you to take a deep breath and ask yourself, are they bad at crypto, or are they just laundering millions of dollars? I don't know. Next, Robinhood is officially getting into the betting game. Oh, this could be dangerous for me. Now, on March 17th, the trading giant launched a predictions market hub in partnership with Kalshi, allowing users to bet on the outcomes of major political, economic, and sporting events. Yeah. Robinhood, the platform that routinely halts trading whenever the market gets too exciting, is now running a Vegas-style sportsbook. So how does this work? Well, the platform offers contracts priced between 1 and 99 cents, representing the market-assigned probability of an event actually happening. So for example, if a contract is priced at 53 cents, it means the market believes there's a 53% chance the event in question will occur. Now, what can you bet on? Well, the Federal Reserve's next interest rate decision, who wins the next election, or major sporting events like March Madness. Robinhood CEO Vlad Tenev is calling prediction markets a truth machine, claiming that crowd wisdom and financial incentives will reveal more accurate forecasts than traditional polling. And why does this even matter? Well, prediction markets have long been controversial, especially when it comes to betting on elections. And while sports gambling is wildly accepted, some regulators have pushed back against political betting, arguing that it could be used to, manipulate elections. That's why Robinhood is partnering with Kalshi, a platform that is fully regulated by the Commodity Futures Trading Commission, or CFTC. So technically, this is all legal. Still, it's kind of wild to think that Robinhood is now running a betting market, while at the same time Polymarket, the largest crypto prediction market, was banned in Singapore for illegal gambling. So what's next here? Well, Robinhood's expansion into prediction markets is a clear sign that the platform wants to be more than just a stock brokerage. So if this takes off, don't be surprised if crypto betting markets explode in popularity. After all, if we can bet on Bitcoin ETFs, meme stocks, and GameStop rallies, why not throw some money on the next presidential election too? We'll be right back after this quick break. Welcome back. It's time for one of our newest segments, Socially Awkward. It's so new, in fact, we don't even have a stinger for it. Javi, let's get on that, buddy. But this is not about my teenage years. This is about social media, the landscape, and what's happening next, because it's important whether you like it or not. And if you've ever needed proof that crypto markets are completely unhinged, look no further than Telegram's Pavel Durov. Now, Durov had been under investigation in France for allegedly allowing illegal activity to flourish on Telegram, and he just had his legal restrictions temporarily lifted from all this mess. So in practical terms, this means French authorities have decided to pause their case against him until April 7th, allowing him to leave the country and resume his life, at least for now. Now for Durov, this was a first-class ticket straight back to Dubai, where he wasted no time posting an update on Telegram declaring that it feels great to be home. He also took the opportunity to remind everyone that Telegram has not only met, but exceeded its legal obligations in moderation, cooperation, and fighting crime. Whether or not French authorities are buying that argument is, another story, but for now they're allowing him to walk. Now the crypto market, however, took the news in a much more dramatic fashion. Almost immediately, Toncoin, Telegram's blockchain-linked cryptocurrency, exploded in value as if Durov's ability to get on a plane somehow changed the fundamentals of the project overnight. Newsflash, it didn't. Because the price, though, however, did jump from $293 to $346 within hours, hitting a 7-day high of $359 before slightly cooling off to around $341. Now, if this reaction seems wildly disproportionate, that's because it is. The market somehow interpreted one man's temporary legal break as a signal that Toncoin is now more valuable, despite absolutely nothing about the project itself actually changing. But logic has never been a prerequisite for crypto price action, and traders saw Durov's return to Dubai as an all-clear sign to pile on in. Meanwhile, the Ton Society, which is the grassroots movement supporting the open network Ton, treated this like a major political victory. They had previously written an open letter to French authorities urging them to release Durov, framing the case as a battle for the freedom of free speech and transparency. Now that he's free, at least for, the time being, the Ton Society is doubling down on its support, praising Durov's leadership and commitment to a decentralized future. Of course, the real irony here is that while all of this was happening, Telegram hasn't changed a thing about how it actually operates. The same anonymous accounts, untraceable transactions, and crypto scams that got Telegram in legal trouble in the first place are all still running as usual. The platform remains one of the most widely used tools for shady token launches, pump and dumps, and outright Ponzi schemes, which was exactly why French regulators started looking into Durov in the first place. So to sum it up, Durov is temporarily free, Toncoin is mooning, and somewhere on Telegram, a scammer is still convincing people to send them their seed phrase in exchange for guaranteed returns. Which goes to show that nothing ever really changes, except, of course, Durov's hairline, face, body, and level of self-importance, of course. Look at that photo. That's not the same guy. We'll be right back. right, boys and girls, it's that time of today's show where we break down everything and we declare it bullish, bearish, or whether it was just a big load of BS. We're going to recap our top 5 stories of the day and decide if today is feeling great or really, really terrible, or if it's just a whole bunch of nonsense. Let's get back into it. Our first story was Fintech companies are becoming banks under Trump. Now, to recap, SmartBiz just became the first Fintech to secure a banking license under President Donald Trump's second term, proving that Fintechs can, in fact, sneak past the regulatory moat and into the castle. This could be opening the floodgates for more Fintech firms to become banks, bringing more competition, more innovation, and maybe, just maybe, actual banking services that don't feel like they were designed back in 1987. So yeah, fintechs are infiltrating banking. Big banks, you might want to start sweating if you haven't already. This is bullish, man. This is another part of the Bitcoin maturation process and adoption cycle. I can't be anything but bullish on that. Exciting things ahead. Next, we have our good friend and partner, Xapo Bank, launches Bitcoin-backed loans, baby. Now, because selling your Bitcoin is basically a crime against the future right now, so you don't want to do it. And Xapo Bank is doing its part to help hodlers everywhere stay liquid by letting them borrow against their BTC instead, while also keeping it so safe. My sweet little Bitcoin baby. Now, the loan to value ratio is conservative, meaning you're less likely to get liquidated overnight because Jerome Powell sneezes and then Bitcoin drops 15% all of a sudden. And this is exactly the kind of responsible lending that the crypto world needs. We need to be able to borrow cash without dumping our sweet BTC. Sounds like a win to me. I'm bullish on that. So right now we got 2 bull stories, 0 bear stories, 0 BS. This is a great start. Let's see what we got next. We have Kevin O'Leary from Shark Tank fame says crypto's Wild West days are over. Now, a bunch of crypto cowboys are behind bars these days, but let's not pretend that that means crypto is suddenly a buttoned up industry all of a sudden. Scammers haven't exactly gone extinct. They've just gotten better at hiding. We've seen there's a lot of new scams out there, and they probably will continue to evolve, unfortunately. There's a lot of bad actors, and while regulation is definitely tightening, saying the Wild West era is over is kind of like saying crime was solved just because one mafia boss got arrested. So, will things be less lawless? Maybe. A full-on crypto utopia? Not a chance. This story is ringing BS to me, but this story also does come with this incredible picture of Kevin O'Leary. Look at those little tiny legs of those. That guy needs his own little pony. He can't fit on a real-sized horse. He's adorable. I like Mr. Wonderful, though. He's a funny guy. Next, we have the SEC might scrap Biden-era crypto custody rules. Now, the SEC is rethinking stricter crypto custody, meaning Wall Street complained loud enough to get their way, as they always do. Now, while some extra safeguards wouldn't have been exactly a bad thing, less government micromanagement over digital asset custody means the industry gets to keep innovating without constant interference. And frankly, if you're still trusting third parties with your crypto, you should be more worried about your own life choices than SEC policies. So less SEC red tape equals more freedom for crypto, which to me, that sounds pretty darn bullish, baby. And next, we have XRP price predictions hit triple digits. Oh boy. Crypto Twitter has entered its delusional phase again, with analysts predicting XRP will hit $100 eventually. No timeline, no reasoning, just vibes. Meanwhile, another analyst thinks $333 is in play, which would require a market cap equal to the GDP of South Korea. One even dismissed concerns about market caps entirely, just calling them an illusion, which is exactly what XRP hitting $100 is. So fantasy price targets with no real logic behind them. This is classic BS. I'm sorry, XRP Army. I think I can hear all of you groaning across the world right now. you're just going to have to wait. I don't think those predictions are based in any kind of real reality, at least not right now. So our final score today, we have 3 bullish, 2 BS, which means our verdict for today is feeling very bullish, baby, which means money gun. Oh, actually got one in my mouth.
Boy!
Yeah, boy! Perfectly timed, Mike, with a hint of BS sticking to the bottom of our very bullish shoe. We've got fintechs breaking into banking, Xapo helping Bitcoin holders everywhere stay liquid, and the SEC is finally starting to back off. Sure, crypto Twitter is still smoking hopium, and Kevin O'Leary thinks regulation solved all of our problems overall. But hey, today is a solidly bullish day. It's something to be excited about. So go out, put your dance shoes on, take out your favorite girl for an ice cream. Today is a day to celebrate, my friends. And that's it for today's episode of the Blockchain Report. As always, thanks for tuning in. If you liked what you saw, or maybe you hated it and want to tell me about it in real time, make sure to like, follow, and subscribe to Roxham TV and Hank at Roxham TV on all platforms. Otherwise, I'll see you tomorrow, same time, same place, same level of absurdity. And before we go, stay safe, stay humble, and always remember to HODL on. See you tomorrow.